Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Here we are. Why don't I clear my throat? There we go. Here we are. It's about 10:30 on the West Coast. Actually, had a really cool presentation on Mondays. It seems to be about once every couple of weeks or so. One of our TRI OGers happens to come on the call and talk a little top-down fundamental analysis with the community. So I kind of like that too. You're not always going to find markets where, oh my God, there's a trade, I got to buy, I got to sell, And I'm getting the feeling today's a bit of a backfilling day. So I don't really see anything dramatic happening. We can talk a little bit about stuff that's moving around. If anything, I thought today was an absolutely perfect day to do a little sort of top-down review of what the hell's going on in the world. Sadly, I think we have to accept the fact that, years that ends in 8s, 9s, 0s, 1s, and 2s, usually there's a recession sprinkled somewhere in there, and sure enough, I think we're heading down that path this decade as well. So whether it be things like messages from the Fed that don't expect short-term interest rates to rise anytime soon. Actually, we looked at a really cool study of 2 versus 10-year yields and how the stock market usually performs based on their relationship. And it looks like we're just getting started in this ultimate cleanup of the market here through a very typical recessionary period. So having said that, a big part of my conversation with the community today was, believe it or not, was actually around this tweet that I put out earlier today, because I think this really sort of typifies what I'm seeing in the market. And that is, for those people that were interested in buying, looking at the market here, obviously in red boxes, this really isn't the best place for buyers to really be too interested right now. And if anything, based on all of these projections, actually it makes a lot of sense why people would maybe be thinking about being net sellers up in this area. So location-wise, actually, it makes a lot of sense. Mr. Barstool making fun of professional money managers, saying this game is easy. What they don't realize, Mr. Barstool didn't realize, is he was actually walking into a trap here. And bang, he got punched in the nose. So, the bottom line here is red boxes, like I said, generally speaking, buyers really shouldn't be that interested. So in this kind of environment, we're way too late to be buyers. And the question, and of course, banging out doubles, sell, into rally, sell into strength, make sure to pay yourself, all that kind of conversation. We're way too early to be thinking about being a new buyer, right? We can either sell or, maybe we can think about shorting, but I just don't know whether we're quite ready to actually call a top here. So when I put this kind of tweet out, the way that I like to trade, because it suits my personality type very well, I like to have very well laid out structural reasons for acting. And I believe that one of our sort of time-tested setups that we like to trade is developing, but we're not quite at the stage of actually pulling the trigger. We're just a little bit too early to get too excited on the short side. So with that kind of backdrop, too late to buy. Maybe take profits into your names if they're popping. And we're still maybe a little too early to call tops and start shorting aggressively. Maybe this is a good time to just sort of talk a little bit of fundamentals, right? Let's take a look at the big picture. Let's let things settle down. Let's see trade setups develop. And, take some time now, maybe do some journaling, retrospect. How is Mr. Barstool feeling through this? Is he ready? If the market wants to really punish him, can he absorb that kind of punishment? We'll see. Only time will tell, right? But as it stands right now, I'm kind of just sort of sitting on the sidelines going, okay, well, so this is a place where shorts really ought to be seriously considered. I'm just going to let this develop and give me a trade setup. So with that said, probably not a hell of a lot new to say about our chart deck. Sure is getting busy, eh? Holy moly, the levels. We'll just quickly go through this, but I don't really have a lot of new trade ideas here today. I'm just sort of watching. U.S. dollar index, like we said, through Fed announcement, I believe there was a trap laid, 38.2 bounces. We came up into that area. If this is the extent of the rally, that's fine. So be it. And now I would expect some sort of test of these lows, candle body lows, tails, trap bears, blah, blah, blah. Reload zone, right? And then, and really I expect this whole sort of bottoming process in the US dollar here to actually take right through till probably the middle of July. This is going to be really, really choppy through. This is also a big celestial event window, so I have no idea what this is going to look like, but this is going to be a bit of a pivot, I think, in the market. That's sort of the same kind of thing, that conversation. Knock Mr. Barstool off his stool. All the people that bought the euro at the top, they're all getting punished. Now we're in sort of backfilling environment, and I see this right across the board all over the place here. So, stock market, same thing. This is the risk on sort of proxy. If US dollar index is going down, that should mean that risk is coming back into the market a little bit, and you can see the stock market's trying to rally back up here. The oil market is trying to stabilize. Remember we talked last week, is this now all of this cluster of horizontal support and resistance? Does it now actually start acting as support, and then we start building our way higher? Or do we fail through this level and it becomes resistance? I think the jury's still out right now. And you can see risk on is catching a bid here today. Probably on the other side, we should see risk off a little bit softer. So let's go see what's going on there. Potential inside bar failure on the bond market right at Mountain Man. Nothing really too solid there. Interesting to see the gold is actually fractaled out here, and we did have a pretty deep move overnight. And I also did see those gold and silver stocks I was talking to you guys about. That head and shoulders pattern has confirmed. So, and the silver also has a nasty head and shoulders. So I got to say, I'm back into sort of cool your jets kind of thinking on the gold market. And if this bond market does really crap out and the stock market starts enjoying a half-decent counter-trend rally, really, I could see the bonds work their way all the way down, candle body lows, wicks and tails like to be eaten, blah, blah, blah. Probably if we do good old reload zones, that's going to be down in that level. And boom. And sure enough, look at that. Candle body lows, 78.6s. Love those. Like I said, with the gold, very politically unpopular to say be careful here, gold bugs, but gee whiz, be careful here, gold bugs. I suppose if the rally wants to continue, we'll see nice prints, nice closes above this 1750 area, and also too that's a psychological number as well. So show me prints nicely above this 1750, and I'll think that the bull is back in charge. Right now, we're back into skepticism. And like I said, if risk on wants to take off here and we start cranking right back up against those old highs, maybe we have to see risk off take a bit of a pause here. Sort of continuing on that theme, I like to follow this relationship. I think it has broken down. We do have a bear div on this as well. So junior stocks are enjoying a bit of a counter trend rally day. Remember I said backfilling, seeing a lot of that kind of price action. No real new trend direction here, still down. And we're starting to see other internal indicators starting to look a little waffly. The XLY versus XLV, or XLP versus XLV. Something like, I don't know, one of the crazy sentiment indicators. The consumer discretionary versus consumer staples. It's starting to show some signs of toppiness, which is another sort of risk off kind of proxy. So we'll see how this goes. Long and short of it here, I showed you that S&P chart. It's very tough for me to justify buying anything right now. And if I happen to have stuff that is moving, well, great, wonderful, rock on. This OSS as an example of a stock that has my attention here today. I'm already long, so I'm not really thinking about buying anymore. But wow, I thought when I saw this, and also too, it's on very heavy volume as well. I don't think I have the volume on here. Something is going on here. Really good example of what we call an outside upside key reversal. So I'm going to be watching whether this market can close above 197 here on the day. If it can, believe it or not, a trade through that high, 202, is the bar's high. Who knows how this day is going to finish. But that would actually be a huge buy signal tomorrow. If we can finish out the day up here, up top, and then tick through the highs tomorrow. And I look at this and I kind of think, well, bull AB equals CDs, and I think, there's the old top, and I think there is gaps that need to be filled in. So, that's not out of the question. And of course, if they report any kind of half-decent earnings numbers, somebody obviously knows something here, and they're bidding the stock up. So there are these kind of bright spots in the market. One stock we're interested in, actually, I sold half on a double on this one, but hey, he's enjoying a pretty nice bid. And I mean, what the hell? Money is pouring in here. But I just don't have any doubles today. Lots of fun stocks. And of course, I talked to you guys lots about all these stocks. But no real bang out doubles today. But we do have our TRI SOF meeting tomorrow. So by all means, if the gang happens to find assets that are trading at or below, reload zones, putting in W's on divergences, my buddy Kevin, he's so good at hunting these things. So we'll have to see what he has to say tomorrow night. But my general feeling is I'm not seeing a lot of new setups coming in. A lot of this, you're seeing a lot of green on the screen. But it's kind of like one of these backfilling kind of markets right now. So here's an example. I mean, you could argue this guy's still backfilling this down move here. But fascinating price action. You can see there's even a real war here. I don't even know if this is going to actually confirm the outside upside reversal. But really good screenshot for you all to understand what a key reversal could potentially look like. Very, very strong stock there today. Heading on over to the corn, I think I've talked lots in the public broadcast yesterday about sort of my expectations. If the stock market itself is rolling over, my hunch is the corn will probably roll over too. It was interesting, actually, in Jamie's presentation today, he was talking about how when the VIX gets to a certain level, the Bitcoin and the S&P start correlating highly. When the VIX is very low, they sort of disconnect. So the VIX is back up again, so it shouldn't surprise us that the correlation between BTC and something like the S&P 500 is starting to sort of move in lockstep again. As in essence, they are what I would consider risk proxies in the marketplace. And actually this is interesting because for a while, for a very long time period, gold was acting as sort of a flight to quality, safe haven kind of idea. But it also seems to be moving in conjunction with the risk assets as well of late, which did catch my eye. Notice stocks kind of rolling over, oil kind of rolling over, Bitcoin kind of rolling over, and here is gold looking a little heavy as well. This is the reiteration. I don't see any breakouts anywhere here. This is just a backfilling kind of day. It was a great day to review fundamentals. So, same sort of thing on the corn. I've been showing you this picture ad nauseum for quite a while, and ironically enough, I still think it's still valid. So, interesting how on this side we lost the bow tie and actually bottomed and then recaptured it. I wonder if that's sort of what's going on here. So, we kind of are losing it, and you can see the market's desperately trying to recapture it. Believe it or not, if we can recapture this and start moving higher, I don't see any reason why we can't go up and tag the top of this bow tie, which is going to drive everybody in crypto land crazy. It sucks. But I just don't see a real fundamental driver on the corn just yet. So as a result, what this chart really is Arthur Hayes stop run kind of conversations where we're not trending. The irony of it all is at this bow tie, we're probably going to be almost exactly where we were at the start of this, and it's just stopwatch right, left, and center. Last night and yesterday we were thinking down and we were thinking pointing lower. I don't know whether I really like the idea of playing the corn because of, especially all these support lines in here. This is going to be bumpy, right, as we work our way through these trend lines and horizontal support and resistance. So, if there was a trade here, I really liked actually, we even did this through the video yesterday, walking you through a bearish bot setup on Ethereum. And you can see overnight the shorting level, and I remember walking through this trade with the public yesterday. So had its move stopped to a scratch level. At this point, you shouldn't lose money on this trade. Had its move stopped to trailing level, so as a trader, I can start thinking about locking in profits. Into the sort of New York kill zone. Actually, no, this was the London kill zone last night. She was cranking lower, and you should have had your AOCO order working to liquidate at 214 and change. But you can see she just ran out of gas, and actually a really good example of volume divergence here, where these pushes to new lows, you can see the sellers just ran out of steam. Where are the sellers? So, we made new lows. If this was a bear, we would have seen more volume ramp up, but that didn't come in. And then on that sort of divergence, which confirmed here, that opened up the counter trend rally opportunity. So what I usually like to do with move stop to trailing is I just simply at this point say, okay, well, show me some market structure and I'll just walk away. So the market rallied back up, came back down, tested, and broke out. So I would basically say on this short, you probably are best just to have hopped off here. You got to wait for the next setup to develop. That's a sort of, 1 hour price chart. I don't even really like talking to the public about 1 hour charts, but that's sort of what I saw happen in crypto and really the whole stock market. Bitcoin, same thing. We were dumping overnight and they brought the market back. And you can see it right across the board, Litecoin, Ethereum, and Bitcoin. We've made lower highs and lower lows. By definition, that's bearish. But entering new trades on the break of these lows, that's not such a good idea. You don't want to be entering the trade down here. That's just asking for trouble. So, picture really hasn't changed. And as I said, today I think is a lot of backfilling. And that's usually what happens, sort of first thing Monday morning. Get all the public to panic on the retail open, and then they spend the next day or so backfilling into Tuesday, Wednesday London kill zone. And usually something like 70 to 80% of the time, the trends of the week are established through the Tuesday, Wednesday London kill zone. So ironically enough, actually what you're seeing here and what you're seeing in the stock market actually is just business as usual. Drives you crazy, but that is a trader's life. Not really a hell of a lot new to report. I did pick up a little shitcoin over the weekend, that BRD. I also was working some bids down below. It's basically coming back down to... you can see it, like a lot of these cryptocurrencies are looking very heavy right now. So on names, this is why I like to work like multiple orders, maybe have an order at a W, also have orders at bullish, reload zone levels, gaps, horizontal support and resistance, that kind of thing. So that's the kind of environment I think we're in now, where, if you were going to be working bids against the bottom end of ranges, now's the time to have all those stinky bids working. More backfilling. All right. Okay, I think I'll leave the presentation at that. A little bit shorter, not a hell of a lot new to talk about here today in the market, but There are some really interesting bright spots out there. I think Kevin even said that he was interested in a couple altcoins. I didn't really see anything new that jumped out at me this morning. Again, more sort of conversations of we failed technically, and now we're just doing dead cat bounces in the market. So there you go. All right, everybody. Have yourselves a great day. I hope you got some value out of that. All the best, and bye.